When most people hear the phrase trading strategy, they imagine something cinematic. They picture a perfect setup on a glowing monitor, clear green arrows pointing up, and a sequence of winning trades that never seems to end. They envision a black box system, a secret code that tells you exactly when to buy and sell with 100% certainty. But the mechanical reality of professional trading doesn't look like that at all. A real trading strategy isn't a crystal ball. It's a risk management framework. It isn't about being right all the time. And it's certainly not about predicting every zig and zag of the market. In fact, a professional strategy assumes you will be wrong frequently. Real trading is much simpler, much more boring, and infinitely more disciplined than the public realizes. It isn't a hunt for the big win. It's a repeatable process designed to capture a small statistical advantage over a large number of attempts. Once you strip away the hype, a real strategy looks less like a gamble and more like a structured business plan. At its core, a trading strategy is nothing more than a rigid set of rules. It is a decision tree that removes the need for human intuition during moments of high stress. A real strategy tells you 4 things with absolute clarity. The setup. Under what specific conditions do I even look at the market? The entry. What is the exact price trigger that puts me in the trade? The exit. At what point is my thesis proven wrong? And at what point is my profit target met? The size. How much of my total capital am I risking on this specific idea? That's it. There is no magic, no gut feeling, and no secret indicator that only the elite possess. It is just structured decision-making. The reason these rules exist is that without them, every trade becomes a purely emotional reaction. And as we've discussed, the human brain is biologically programmed to make the wrong decisions under financial pressure. Rules are the guardrails that keep you from driving off the cliff of inconsistency. This is the biggest mindset shift a beginner can make. Most people are obsessed with the entry. They spend 90% of their time looking for the perfect signal, the golden cross, or the specific candlestick pattern that guarantees a move. But in a real strategy, the entry is only a small part of the equation, and it's rarely the most important one. You can have a perfect entry and still lose your entire account if you don't know how to manage the trade once you're in it. Conversely, a mediocre entry with elite risk control and a disciplined exit plan can actually be profitable over time. The entry gets all the attention because it's the action part of trading. It's the moment of commitment. But the structure of the trade, the risk-to-reward ratio, and the position sizing is what actually determines whether your account grows or shrinks. A real strategy treats the entry as a mere if-then trigger, not a heroic prediction. In a professional strategy, risk is defined before the trade even exists. You do not click buy and then figure out where you might get out if things go south. That is the path to ruin. Before you even look at a profit target, you must know your invalidation point. You already know, if the price hits X, I am wrong, and I will lose exactly Y amount of money. For example, a common rule is risking only 1% of your total account on any single trade. This math ensures that no single failure can seriously damage your capital. If you lose 1%, you still have 99% of your bullets left for the next opportunity. Survival is the first, second, and third step of trading. Without a mechanical limit on your downside, even the most accurate strategy in the world will eventually hit a black swan event and blow up. In a real strategy, the primary goal is not to win. It is to not lose your ability to play. A real strategy defines the end before the beginning. This is where most retail traders fail. They enter a trade and then try to decide where to sell while they are watching the price move in real time. During a trade, your emotions are at their peak. Your heart rate is up, your dopamine is firing, and your fight-or-flight response is active. If you try to make a decision in this state, you will almost certainly hold your losers too long, hoping they come back, or close your winners too early. Out of fear, the profit will vanish. A real strategy uses a stop loss and a take profit order. These are preset mechanical exits. They remove the choice from the equation. If the market hits your target, you take your profit and move on. If it hits your stop, you accept the loss and move on. Structure removes the burden of decision-making when you are at your most vulnerable. Here is a mechanical truth that surprises most beginners. Not trading is a position. Most people feel that if they aren't in a trade, they aren't working or making progress. But a real strategy includes long periods of doing absolutely nothing. There are times when the market is noisy. There is no clear trend, no high probability setup, and no edge to be found. Experienced traders understand that every unnecessary trade is a leak in their capital. If you trade when your strategy doesn't give a signal, you aren't trading, you're gambling. Overtrading is the fastest way to destroy your consistency and pay unnecessary fees to your broker. A real strategy is like a predator waiting in the grass. It is 95% waiting and 5% execution. If the conditions aren't perfect, you don't move. A strategy doesn't prove its value in one trade, one day, or even 1 week. It works over a large sample size. You have to think in terms of 50 trades or 100 trades. Within those 100 trades, you might have a string of 5 losses in a row. That is mathematically normal. In a real strategy, a single loss is just a data point. It has no emotional weight. The goal isn't perfection, it's statistical expectancy. You have a win rate, for example, 40%. You have a risk-to-reward ratio, for example, 1:3. You apply this repeatedly. Over time, the math of the edge creates the profit. If you change your rules because you lost 2 trades today, you no longer have a strategy. You have a chaotic series of guesses. A real strategy requires the discipline to stick to the plan, even when it isn't working in the short term, because you trust the math in the long term. So, what does a real trading strategy actually look like when you see it in action? It looks like a checklist of entry criteria. It looks like a spreadsheet of meticulously tracked risk. It looks like a timer waiting for the right market session. It looks like patience. It doesn't look like excitement. It doesn't look like constant action or trading from the hip. It isn't about beating the market through sheer willpower or intelligence. It is about being a disciplined administrator of a set of rules. Most people find this real picture boring. They want the adrenaline of the gamble. But what feels exciting in trading is almost always what causes the losses. What feels simple, repetitive, and disciplined is what survives the test of time. A real trading strategy isn't about finding a golden ticket trade. It's about managing every single trade with the exact same mechanical rigor. It's about structure, discipline, and, above all, risk control. Once you understand that, you stop chasing signals from gurus and start building a system. You stop looking for the one and start looking at the math. And that is the exact moment when trading stops being a mystery and starts becoming a profession. If you want to keep understanding the deep mechanics of how markets, money, and these hidden systems actually work, simply, clearly, and structurally, subscribe. Let's keep fixing the mechanics together.